What's going on, everybody? Michael Silva here, the next big short. That's what we're going to talk about in today's video. Things are kind of lining up here. Now, it doesn't mean to get all aggressive or this or that, but we are going to lay out an opportunity that I see forming that has the possibility to start getting hit to the downside. So we'll see how that plays out. You're watching the Stock Market Brief Show. Once again, my name is Michael Silva. If you haven't done so already, make sure to like and subscribe to the channel. It is greatly appreciated. Before we get into that specific short, we got to show how the market is performing. So we're going to look at the S&P 500 right now, and you're going to see some stuff on my screen, mainly this downsloping channel we broke out of, these dashed lines up there. That is the weekly expected move. Bear with me if you don't know what that is. I do have a video link in the description that walks you through why those and how those work so well. Now, as it stands right now for the week, we are fairly unchanged to slightly down. Today, right, it was some bearish trade overall, right, down 1.1%, but really it was just an inside trading day. One thing I want to call out here as we talk about the next big short, I want you to pay attention to some of these indicators, how they're starting to curl over, right, like for example here, the MACD, and we will see some other stuff momentarily starting to curl over there as well. Now, yesterday I shared this chart, and I showed this because I had some interesting levels that came out after the close of business. Now, if you don't know what this software is called Bookmap. This is stuff that I use when I intraday trade and help to really there's some strategies that I use as far as like the buy stop pop, which I made a YouTube short on, but it takes level 2 market data and it applies it as a heat map, right? You know what level 2s are, where you see a bunch of numbers flying across the screen really quick. I'm no good at reading that and interpreting it, but on this, I am much, much better, where I can actually see high levels of liquidity. And we called out 41.30, we called out 41.95 and 42.10. By the way, Bookmap offers my subscribers a discount. I put that in a pinned comment. Take a look where price action actually finished out with. You can see right here at about 41.30 on ES. There's not much levels to call out now, but I did see this light up over here towards the close of business. So that's around 41.70, and we can see this area held 41.20. And then right here, as the market was coming down, I did see this area light up right at about 4100. So those could be some levels to watch tomorrow. Now, we've been talking about this 15-minute time frame, right? These are the weekly expected moves on the SPY. You can see 420.02, 404.68 to the downside. Now, take a look. This trend line we have been watching, right? Because every time that it tagged, it's had some explosive move from that. And now as it stands, I want to call out something very important, especially for short-term traders. Now, I want to walk you through first the trend and what could potentially take place. So first and foremost, we have this purple line on the screen. That right there is trending up. That is the 5-day moving average on the 15-minute time frame. Okay, and what happened today is you can see we broke down through that. We came back up, right, putting in a lower high. We talked about this shooting star candle yesterday, and it started rejecting from there. So now we're just sitting right on that trend line. So the bulls really need to step up here. Now, this is very important. I also anchored a VWAP right to this shooting star candle, which marked that, lower high compared to this. And I didn't mark it here, but I did on the Qs, and I'll show you. I know where it ends, but this anchored VWAP, if I were to apply it, you'll see it actually right around this same area. So in order to be more bullish here, you want to see price take out and recoup that 5-day inclining moving average, right? The more we stay under it, the more it's going to start curling itself over and go neutral. And you want to see it reclaim these anchored VWAPs, both pinned from this peak, and they both end up right here in confluence with the 5-day. Okay, so if this starts breaking back up, but then comes back down, right? We'd have a high, a lower high, a lower high, a lower high, and then we'd start breaking potentially down. If we crack through this, that's a lower low, and that could very well start the shift of a potential short opportunity here, okay? So that is what I'm looking with at the SPY. If it reclaims these levels, we could be back to bullish, but if it cannot do that, be very cautious. If you take a look at the Qs, I did pin the anchored VWAP here and pinned it here, and you can see where's it confluence with? Right there with that 5-day moving average. And look where it came today. It broke down, it back tested, and now it's right here, rather flat. It looks like it's kind of just walking a fine line, right? So we have this area of support being held up by the bulls, right? We'll call this right here the bull camp, right? This is where all the bulls are hiding out there, you know, and the bears keep knocking the tent down, like they keep on knocking the wall closer and closer, right? So lower highs, boom. Boom, boom. So they're getting closer and closer to taking out their fortress here. And if they do, bam, we can see a crack and flush to that lower weekly expected move. The 5-day moving average can start turning. These anchored VWAPs from these peaks can start turning down and potentially act as levels of resistance going forward. Hope that makes sense. If we take a look at the channel, right? So this channel we've been sharing too. This is that melt up channel. You can see prices right back there into the middle of the range. Could be a potential bear pennant, right? Like I said, want to see a reclaim of this 5-day moving average to feel a little bit more confident there. So we do have to be patient as it stands right now if you are bullish. Now, where, we're talking about, potential big short opportunities, or could be potentially big short opportunities, right? The market has been on a monster rip, right? Actually, really since 2023, right? We haven't actually seen it consolidate. Now, when you measure this rip up to like this one, even this one, it doesn't really compare. This is not that big of a move. It's about a 10% move from the 2023 to where we are, right around there. Okay, so if I take a look here, looking at this and say to myself, okay, well, we haven't really seen it digest. It's just been pretty much straight up. However, I want to call out now the summation indexes, mostly the NYSE McClellan, and then we'll look at the NASDAQ because that lines up with the short opportunity coming later in this video. You can see here we've been talking about this negative divergence. I'll pull that out shortly, but the NYSE summation index is starting to curl itself over. Now, if you don't know what this is, I talked about it in a YouTube short video too as well. So you go back in my channel, I was like, I think I posted it actually. Yes, I'll tell you exactly when I posted it. It was November 19th, right about here. Okay, and the reason why I posted it there was because I saw this starting to turn over. Okay, and this identifies changes in trend. And as you can see, I actually did it with the NASDAQ summation index. Right there, boom, it got hit to the downside. Now, it didn't crash to all-time lows, okay? And then we talked about it again while it was starting to turn up there, and we saw what? A shift in trend. Now, what we're starting to see here is it's starting to curl over. It doesn't mean it's going to happen for sure, but it's starting to curl over. So if the parabolic SAR upticks, it could identify a change in trend going forward. Okay, now if I do show you the divergences on the NIMOD, this is basically taking this right here, but zooming on in, I will call out, right? We have a high to a lower high. We crack down through zero, which is typically more bearish, right? And we are in an overall wedging type structure, right? So you can see we have a connection there, connection there, connection there, and it's been just on this steady uptrend trend line. So if it starts breaking down, it could potentially see some further weakness. Now, the NASDAQ summation index also is showing signs of turning around slowly here too. And we've been pointing that out, right? We've been waiting for this, slowly looking at it. We had this divergence on the NASDAQ McClellan oscillator. Today, it crossed down through zero, which is not, a great sign for breadth overall. And as this turns around, if it starts curling more, the parabolic SAR will uptick, and it could very well identify a change in trend like we've seen in prior changes in trend. Okay, if we align that also with the BPCO and PQ, so this is kind of now, this is where I want you to pay attention for a potential short opportunity. So NASDAQ composite is heavily, moved by semiconductors, right? A big portion of that is semiconductors, and I'll lead that into the potential opportunity here for a short trade. So NASDAQ bullish composite here, you can see the RSI has been very frothy. It can stay frothy for a while on the bullish percent index, but as you know, when it gets overextended, it cycles from oversold conditions to overbought conditions to oversold conditions to overbought conditions. Now, it doesn't tell us is the market going to crash, or is it going to, how far it's going to pull back? But it tells us and gives us an idea like when to potentially let our foot off the gas. Okay, so keep that in mind before we get into all the other charts. I want to show a couple other things that I found interesting. So gold, we broke down from this rising wedge, and you can see here we have 3 shooting star type candles forming. You can see a higher high, a higher high, higher high, higher low, higher low, higher low. But really, when you look at this, it's kind of flagging. And when I saw that earlier today, I was like, interesting. So if the dollar pops up, what's the dollar look like? This can start heading back down. And when I pulled the dollar up, we know the correlation it has with other assets like the S&P 500. The dollar right now is really just flagging, just consolidating here too. So if the dollar all of a sudden gets a little bit of a breath of movement, right, in these three white soldiers right here, is that three bar reversal type pattern or strength pattern there, it might be telling us that we might see further upside here in the near term with dollar. And if that is the case, the S&P 500 could get hit and gold could head down, which could bring us into the target area that I was kind of waiting and watching for. Now, I'm going to get into some expected moves, and then we'll get into the semiconductors and why that could potentially be a good short opportunity. So Google is actually breaking outside of its lower weekly expected move. It got hit 7.68%. So, 68% of the time, right? I like more, very liquid products. It's much more accurate. 68% of the time, it finishes within the weekly expected move. And now, we're right outside of it, pulling into a 20-day inclining moving average. It broke on a lot of volume right here. So this could be the start of distribution. So even if it comes up, it could potentially flag and we may see more weakness. But just pay attention to that we did get outside of that weekly expected move. Amazon, we've been tagging it for the last couple of days, and these are some big names. I'll call out also the MACD is starting to curl over. And then Tesla. So this is where it's kind of getting interesting. So Tesla has really made a 100% move since this bottom, right? It came down to around 100, and now it's up now around 200, and you can see it's pretty much been straight up. There's been a few down days, right? So the last streak it's been on was like 1 day, 2, 3, 4, 5, 6, 7 days up in a row, and you can tell right here we're moving into the upper weekly expected move. So that might say, okay, put a pause, put some brakes to it. It may need to consolidate for the next leg up, or it might start pulling back. Okay, I will call out the MACD is full blown just moving up, so you'd want to see this start curling back over to be a little bit more bearish. This expected move is right at around 206, okay, just slightly above that. Now, this is where the short opportunity potentially might arrive. NVIDIA also, since right around this point right here, it's been up on a monster move going up over 100% as well. We know it's been a very strong performer here in 2023, and we haven't seen it tested. We haven't seen it digested. One thing that I'll call out is, remember, stocks and equities, right? The markets, they take the stairs up and they take the elevators down. So when and if this gets hit, it's going to take some sort of consolidation or pullback at some point. How aggressive that might be, I don't know. But I will call out, we are right now at the upper weekly expected move. So upside for the remainder of the week, I feel like could be pretty muted. Now, it doesn't mean go crazy short, but it is also putting in a shooting star type candle, right at around that or up the upper weekly expected move. So it starts breaking down through 220. It might open the door for some potential follow through to the downside, but you really want to see this trend right here, broken to feel a little bit more confident that we can see some further downside or consolidation in NVIDIA. Now, if I zoom in a little bit more, to the semiconductors, we can take a look at SMH. This is the semiconductor ETF. And I just wanted to call out here, as you can see, we're starting to curl over right now on that MACD. And if this starts crossing back through, it could, potentially lead to some sell side activity, as we saw here. Boom, it went to the downside, right? So we have, like I said, the NASDAQ summation index is starting to curl itself over, which could identify a change in trend. Okay, we have a negative divergence in the NASDAQ McClellan oscillator. Okay, we have the bullish percent NASDAQ right here. It is overbought condition. Now I'm pointing out here we have the semiconductors within this up channel, which is positive. Okay, but it's been on a very strong shorter term trend right here, and it's starting to show signs of curling over this internal weakness. And if it breaks, it could bring us down to around that bottom of this channel to retest this lower line, or potentially the midline right over here. So it could open the door for a shorting opportunity. The last thing I want to call out for those crazy people that like to trade leverage, this right here is SOXS. This is the Semiconductor Bear 3X. Now, understand, if you do not know how to trade these type of funds or these assets, make sure you read into it, because this you can get blown to pieces with this kind of stuff. But I will call out this very contraction leads to expansion. Expansion leads to contraction. This thing is getting very, very tight right here. telling me that, hey, it's opening the door for a good risk to reward trade. Now you got to play this very carefully because, like I said, just from this marker right here to here, it looks small on the screen, but that right there is $5 per share. It's bonkers, right? So be aware of that. Now, the MACD is starting to curl itself over here, and we have a positive divergence there. Okay, the right over here in the RSI, it's starting to point up there with a subtle divergence there as well. Okay. So when I look at this, I'm thinking, okay, maybe have a very tight stop under this, and then if it can break above this little tight consolidation, it could go for that 25. Potentially, it can go for these prior areas of support that turned into resistance, and that type of move just to that 30 range could, that's $10 per share, which is pretty crazy. And if it is a full wedge breakout, which would be completely bonkers, we're looking at this going up to around 70 as a full measured move, which would obviously be just ridiculously insane. And the semiconductors would have to get very, very, hit very hard. If we would go up to, that 70 range, if I were to look at the, SMH, where would that potentially look like? That'd probably be like, right around this range, which would be, obviously a very, very big hit to the downside. So that's kind of what I'm looking at as far as a potential short opportunity and the reasons as to why when those trends identify changing. I don't encourage people to really short unless they know what they're doing. I don't encourage people to do this. I'm really just sharing my thoughts overall. If you want more different types of trade ideas, I post a lot of long setups here on my Discord. This is Patreon. You can sign up. It's $9 a month, or you pay annually. It's only $90. I give a bunch of different, trade ideas, just a bunch of different charts, which I share here. I track about 40 products, weekly expected moves. I give updated zones, which if you don't know what those are, it's something that I share on here every once in a while, but I give a lot of products there. Give stock market indicators, and also you get access to the community. I do that all for $9 a month, which is, one Starbucks coffee and a sandwich. So I hope you find value in that if you're already in the community. If you're not in the community, always willing to come check it out. That's all I got for you on today's episode, everybody. See y'all later.